Good morning, everyone. The Brecher pre-market video for August 28th, 2025. What are we seeing in here? Well, you get a non-event with NVIDIA. And like one of our loyal subscribers astutely noted, it's probably good for Broadcom and Micron. So we're going to look to be long those stocks. Not sure what I'm going to do in NVIDIA, but I thought the first order of business for my first video is to go over the fretting about the Fed person getting fired. So I just want you to know that number one, that's a long-term problem, and some of the other stuff might be, deficit, all tariffs, all that. But right now, there's only two things that matter. Number one, already the Fed has talked about lowering rates. So it's not that big a deal right now. It's if commodities or inflation or something goes bonkers on the upside and the Fed feels they have their hands tied. That's one reason it hasn't mattered. The other is the big old article in Bloomberg today about the trillion in buybacks by companies, and they're accelerating them. And that's another reason the markets are dismissing any bad news. Bad news is more likely to affect stocks when they're not in the buyback period, the 5-week blackout prior to earnings. And that's voluntary, but most companies adhere to it. So that gets into the middle of September. And sure enough, that's when you've seen a lot of sell-offs in the past. Then we'll watch it. But in the meantime, I want to show you some of the stuff that would be warning signs with the markets. Now, what am I talking about? I'm talking about that if this Fed thing and you lose control of the Fed and everybody worried, you're going to see it in a couple of different indexes. Number one, you're going to see it in the 30-year bond. 30-year bonds hate inflation. If you go over this, and I'll go to Thinkorswim so you can see the difference, and you'll see the correlation. I'm really into John Murphy's book about correlations. Correlations don't matter as much near buyback blackouts with stocks, but go and check out this correlation. We're going to take the Dow Jones Commodity Index on a monthly chart on the left, and then we're going to take the bond market on the right. Now, keep in mind, in 1974 to 1980, you had a lot of inflation. You had the bond market get nailed. You had the bond market actually get nailed till 1982 in August. So what happened? All of a sudden, Volcker said, we started to conquer inflation, and bond rates, when money markets were 22%, we were in some of them, went to nothing. To like 8, and the markets exploded. But rates do matter because it's a different place to put your money. But it doesn't matter right now when companies are buying back so much stock. But go and check this out and put in a weekly chart of the bond market or a monthly on the right. And you're going to notice that when commodities started going up in the COVID supply chain shock on the left, the bond market broke its 40-year uptrend since that 1982. Amazing. Nice correlation. Now, if you see this start to go up, yeah, you'll probably see the bonds have another leg down and break that triangle to the downside. We don't have that yet. I'm just saying theoretically. So one of the things I'm watching is definitely commodities to see if you get runaway inflation. You can use DJCI. If you have TradingView, you use DBA, which that's almost at a new high, or use DBC. That's the one that includes oil. As you see, it's forming a tight triangle. I would use the commodities and the bond market. The other thing I'd watch, because it's bigger than anybody that can strong arm it, is definitely the dollar. The dollar is like a world index, basically. If people really think the Fed is a big deal, you're going to see this dollar index really go down like it did here and here. You don't have that yet. So commodities, bonds, dollar. That's what you're going to be watching. And you're going to be watching it when companies start being in the buyback blackout. So for today, what do I think? Well, I think historically on Labor Day, the day before the weekend of Labor Day, it's historically weak. What do I think now? I think that NVIDIA is keeping the markets down somewhat. You see the NASDAQ's down all at 24. It's not a big deal. Like I said, Right now, usually new highs don't happen, or the tops, until the Russell goes to a new high. You're going to see that a lot of times when the Russell spikes, that's an intraday, intra-year high for the ES. You're going to see it, not intra-year, let's say monthly, a monthly top for the ES. You don't have that. It's close. You need to see that at a new high, which I wouldn't be surprised to see it up here right before the blackouts start. Have a great day. Talk to you later.